Welcome to Trading IQ, where we will learn the unlimited nature of the stock market. Before we start today's video, I would like to thank each and every one of you who subscribe to my channel and would like to request others to please subscribe to my channel if you like my content, as it will help me a lot. In my last video, I have shared some key indicators such as support and resistance, volume, moving average, and relative strength. So if you haven't watched that video, I would request you to please watch that video and come back here, since in this video, I'm going to use all of them and share its features. You will find the link in the description as well as on the I button. So let's jump into my screen right now.
Now, for the purpose of today's video, I'm going to use the same chart of Tata Steel. In my previous video, I've shared how you can draw support and resistance level. So on this chart, this is support and this is resistance. Let's recap and discuss why this is called support and why this is called resistance. Price was getting supported at this level, thus it is called the support, and this level is resisting the price to go above this level, thus it is called the resistance level. Now, beside these two levels, what else it created? A trading range. This is another important term in the stock market. So what is a trading range? See, on this chart, price started to move between this range. It actually created this range back in 1998, right? And it sustained for about 5 years because it broke out that level at this point. So let's not focus on the breakout yet. Let's discuss about the trading range. So it sustained for about 5 years. Now, thus we can call this resistance level a long-term resistance level, right? Because it sustained for about 5 years. 5 years is pretty long-term, right? In the stock market, it is long-term. Now, remember these key points, as this is going to be one of the key fundamental when you're going to buy any stock. So for rule of thumb, you can only consider buying stock if the price trading above its 30-week moving average, right? Second, it has to be outperforming the market, right? Now, the volume will play a key role when you're going to execute your trades, right? How? Let's watch very closely. Now, let's look at these key points where the price is trying to break out of this resistance level but got resisted, right? You see here, it tried to break out and it got resisted and the price went below. Same here at this level, same here at this level, same here at this level. Now, what is volume? Let's recap. So the volume, it represents the overall transaction between buyers and sellers. So you see the volume bar here, right? So all the green bars represent that on that week, since we are looking this chart on a weekly time frame, so all the green bars represent that on that week, buyers were heavier than sellers. And for the red candle, it means that sellers were heavier than buyers. Now, for another rule of thumb, when you see there is a trading range created, you have to wait for it to break out. Now, let's share some key points about support and resistance. Now, if the price breaks above its long-term resistance, it becomes its support and break out with heavy volume. Now, let's look at volumes at these key levels where the price is trying to break out and understand how you would study volume when it is trying to break out of a trading range. So, for an ideal breakout situation, you would look for the grouping of green volume bars, which represent heavy buying activities, and compare them with past behavior. So let's look at each of the level when the price is trying to break out. So here, when the price is trying to break out, you see the subsequent volume not only for that week when it is trying to actually hit that resistance level, but you see the buildup of that week when it is trying to break out. So the building up of the volumes are not great when it is compared with its past data. So you see the volume. I mean, if I put in my mouse cursor, you see the volume here, right? So you see volume 33 million, 22 million, 13 million. But in the past, it saw a volume of 134 million, right? So over 100 million. So the volume is not great. The structure is not great when it is trying to break out of that resistance level. Similarly, at this level, you see more red candle, more red volume bars, which means what? The sellers were heavier, thus it could not break out, right? Now, let's look at the point when it actually broke out and compare its volume action. So it broke out at this level, right? Now you see the consecutive volume 34 million, 56 million, 47 million, 45 million. So the consecutive, the weekly volumes are much greater than when you compare it with its past data. Basically, when it is on the trading range, especially when it is on the trading range, this is the time when you should enter because you see the huge spike of volume here when it is breaking out. And once it broke out of this level, it never reached this level. It tried reaching that level during the time of the economic collapse in 2008, right? But again, it bounced back, and now it is trading at 1100, right? The breakout level was around 100. So this is the power of volume. You see the huge volume structure. So if you gotten here around 100, and you see you could potentially get 1,000% return. This is the unlimited nature of the stock market that I keep referring to, right? So now let's understand another key important part. So this level was acting as resistance level for 5 years, right? Now, once it broke out that level, is it any longer a resistance level? No, right? Now it is acting as a long-term support level because price is getting supported. You see, during the economic collapse in 2008, it tried to reach that level, and since this is now acting as a support, which is a demand zone, so here you see there is a huge demand, and the price got rebounded from here, and it saw a new high, right? So this is acting as support. So once the price is breaking out of a resistance level, it acts as a support level. Similarly, if the price break out of a support level, then it acts as a resistance level. Now let's look at that example. So after this initial this breakout level, the price went up, and from here you see there is a huge supply, right? There's a huge resistance at this level, and it tried to break out here, which and it could not. So let's see the duration of this range. So the range created on the week of 24th April 2006. It sustained for about 1 year, and then it eventually broke out, right? So this level was acting as resistance level for 1 year, and then once it broke out, it was acting as a support level. Now you see why it is acting as a support level. You see the huge demand. It tried to break out of that support level, but due to huge demand, it got bounced back. It got bounced back again. So it got supported. The price got supported. So it is now acting as a support level here. However, you see here the price eventually broke out of that support level. Now, this support level is acting as resistance. As you can see here, the price got resisted here, here, and eventually it broke out later, right? So now this was acting as support. So this is a very important thing of the feature of support and resistance. So if the price breaks out of a long-term resistance, the resistance level will act as a support level. Similarly, if the price breakdown of a support level, it will act as a resistance level.
I hope you understood the concept, and if you haven't, I would request you to please comment down below so I can clear your doubts. So, what I have just shared is a methodology of when to buy a stock, which is the most easiest. Every one of you can follow this method and can see immediate success because this is proven in the market. But here comes the hard part, which is to how to manage risk and how to manage your own expectations. So before I teach all these aspects, don't yet follow this method and invest right away. I'm going to cover risk management later on my channel. In my next video, I'm going to share stage analysis by Stan Winstein. So all my trades are based on his methodology, which are well proven in the market. If you are new to the market or if you're struggling to find a trading setup, which I'm going to teach you anyhow on my channel, I would highly recommend this book by Stan Winstein, Secrets for Profiting from Bull and Bear Market. I'd like to thank you guys again for tuning into this video and would request you to please like, share and subscribe to my YouTube channel, and I see you guys on my next video. Thank you. Have a great day.